Good morning, One Life America. Welcome to our weekly agent conference call. I am your host, Jeff Bowles, and this morning we have a great call planned for you as we have One Life's Agent of the Year, Scott Schaetty, with us. So we're very excited about that. Scott had planned on being with us a couple of weeks ago and came down with a pretty severe illness, I believe. So we're glad to have Scott on the call, reschedule him. He took some time out of his day this morning and look forward to having him here with us. Before we talk with Scott, though, I'd like to begin our conference with our verse of the week and our production and marketing update. We'll start with the verse of the week, and it's out of Romans 8:18, and says this: I consider that our present sufferings are not worth comparing with the glory that will be revealed in us. There's a lot of us that go through hard times, and it's hard to see kind of the light at the end of the tunnel, if you will. We can wonder if our suffering, if the hard time will ever end, if relief will ever come. Yet the beautiful and wonderful thing about knowing Jesus and being a disciple and follower of Christ is that we do have hope. As a matter of fact, we have eternal hope. There's a scripture that I really, really like that talks about us being sealed unto the day of redemption. And here, I tell you what, I'll pull that scripture up as well here real quick. If you'll give me just a second, I have it here on my cell phone. It's 2 Corinthians 1:22. It says, and he has identified us as his own by placing the Holy Spirit in our hearts as a seal and a guarantee of everything he has promised us. So in different translations call that the seal is placed upon our heart for glory. It's a beautiful thing that we do have the Holy Spirit inside of us. It's the hope of glory. When you have salvation, you know Jesus. I hope that every single one of you that are on the call, every single one of us that's listening here today knows Jesus Christ as your personal Lord and Savior. When you have a relationship with him, and because you have a relationship with him, you can look upon hardship, you can look upon suffering and say, you know what? This is nowhere near, nowhere close to what God has in store for me. Comparing that with the glory that will be revealed in me, according to Romans 8:18. And we're so thankful for that. And if you don't know Jesus as your personal Lord and Savior, you can. My question is, does that kind of hope live inside of you? If you don't, we hope that you invite Jesus into your heart and into your life today. We'll have a quick prayer real quick and move along. Lord Jesus, we thank you that we can have hope in spite of every hardship, in spite of every setback or thing that may come against us. We have hope that you are doing a work, first of all, in us through it, and then ultimately there's glory that will be revealed in us on the day that we see you in heaven. And that right now we have just a little taste of that in knowing you. But ultimately we look forward to one day being with you for all of eternity. You are our joy. You're what we long for. You're what we have. You're our only source of hope and source of peace. We're thankful that you died on the cross for our sins so that we could have that peace. So we could have that fulfillment. We could have the hope of glory living inside of us. Lord, we love you. I pray for every single agent that is on this call this morning. I pray that if they don't know you, Lord, that you reveal yourself to them this week. And hopefully maybe they invite you into their hearts and lives, God. We love you. It's in Jesus' name we pray. We thank you for all that you're doing. In Jesus' name, amen. All right, well, we'll move right along to our production update, and then we'll also give a marketing update. And speaking of folks being a little sick, Scott is not the only person that is sick or that got sick. He got sick a couple weeks ago. I'm a little bit sick today, got a little bit of a sinus infection, so you guys forgive me for the tone that I'm speaking with. I'm trying to fight through here and persevere through this difficulty here, but we're going to do the best we can through it. And we'll start now with our production update. We've got production reports for the week of 1/30 through 2-3, so that's January 30th through February the 3rd, and we came in with an excellent number with $1,095,569 worth of annualized premium for One Life. And then for the teams, we'll start at number 5 and work our way to number 1 for the team of the week. And the team report here at number 5, Southern Life Insurance Group came into the top 5. An excellent week from those guys with $74,272 worth of submitted AP. Tyler Rees Group did an excellent number with $80,034 of submitted AP. And then Team Meridian coming up and really going a little bit beyond themselves of what they've done for the last few weeks before. Had an excellent week, trending in the right direction. $92,805 submitted AP at number 2. Life Management Group did their usual extraordinary week with $179,756 of submitted AP. And the Innovative Insurance Brokers with a stellar week, coming in as our team of the week, $225,125 of submitted AP for Innovative Insurance Brokers, making them the team of the week at One Life America. And then now to our top 10 agents. And the agent of the week at number 10, Carl Heiss, with $9,999.96 worth of production, just a hair shy of that $10,000 mark. At number 9, Danny Bean with $10,070 of submitted AP. Out of Jackson, Mississippi, Scott Watkins, $10,187 of submitted AP. Number 7, Josh Sivak with $10,340 submitted AP. Spencer Long came in at number 6 with $11,358 worth of submitted premium. Number 5, out of the call center in Meridian, believe it or not, $11,508 worth of submitted annualized premium. And believe that, folks, hey, wow, that is amazing, selling that much over the phone. And also a guy that we're going to hear from a little bit later on this morning, Mr. Scott Schaetty, keeping his production up there with $14,387 worth of submitted AP at number 4. Now number 3, Angela Barr, submitted $14,706 worth of submitted AP. Number 2 on the list, Landon Ramirez, came in with an excellent week of $19,140. And number 1, our agent of the week at One Life America, is Lisa Gallagher. Lisa, congratulations. You're the agent of the week. Of course, submitting to us $23,845 worth of submitted annualized production. Congratulations to all of you agents that made the list, all of you managers that had your teams make the team leaderboard. And then congratulations to all of One Life as we continue to have record-setting weeks at the start of the year. January was excellent, and we finished out January and started into February very, very well with $1,095,000 submitted AP. So congratulations, and thank you, all of you, for your efforts. I want to give you a little marketing update. As you all well know, we're gearing up for March 6th through the 8th. We're going to have our One Life Academy in Dallas, Texas. So hitch your wagon to a start. Join us at the One Life Academy on the road this time in March with Destination Dallas. That's what we're calling it. So make sure you register today by going to onelifeamerica.com/academy. The locations for this academy will be the location for this academy will be the Hearst Conference Center in Hearst, Texas, just outside of Dallas. We'll have 3 days of intense personal and professional development. Monday, we're going to have a full day of top-flight guest speakers. Lunch and dinner will be provided. To give you an idea of the speakers, here's who we've got on tap for you: Heath Oaks, Courtney Clemens, Perry Noble, and Dave Vobora. So make sure you make your plans to be with us on Tuesday and Wednesday. We'll have product-specific trainings, and we'll give you guys an opportunity to have lunch on the town with whoever you'd like to on Tuesday night. We're going to leave that as an open night. There's one thing that was a concept that we came up with to give you the freedom to socialize and go some different places, enjoy yourself for one of the evenings. And we'll wrap up on Wednesday and head out and hopefully have a great week in the field. So make sure you make your plans to be with us. Again, onelifeamerica.com/academy. Now we'll move to our featured segment, and our featured speaker this morning, none other than Mr. Scott Schaetty. As we've already mentioned, Scott is a graduate of Missouri. He eventually found his way into the insurance industry approximately 10 years ago, found his way to our organization approximately 4 years ago. Scott now operates a One Life office of approximately 20 high-level producing agents. Just last year, Scott wrote $344,000 worth of annualized production, making him One Life Agent of the Year. Scott and his wife Noreen have 3 beautiful kids. I'd like to give a warm welcome now to our featured speaker to the call this morning, Mr. Scott Schaetty. Scott, are you there with us?
Good morning, Jeff. How you doing, sir?
Man, I am doing excellent. Thank you so much for being on the call. The floor is yours.
You're welcome. Thank you for the introduction, and just wanted to welcome everyone to the call. I was honored again to be asked to join the call to kind of share some knowledge and some of my expertise to how we can help other folks in the One Life family kind of get on the same wagon of getting to that $300,000 production mark on a yearly basis. Today we're going to talk about, I know in the past we've talked about what agents need to do to be successful, what I do personally on a week-to-week basis. However, most of the agents on this call probably already know what they need to do to be successful with their leads, the follow-ups, the not homes, the contacting of clients, using an appointment setter, door knocking, all that stuff in a conjunction with one another is going to make you a successful agent. But kind of go further into what we need to kind of focus on of what production, where I get big premiums from is the art of the replacement. All right, 30% of my business comes from finding old or dated policies in homes that the clients have no idea what they are or they're just uneducated about. So I would say 30%. I'll do some case studies at the end of this to kind of let you guys know. Replacing business in the market of life insurance is kind of, if you look out there against other industry folks, it's frowned upon. However, if you do it in an ethical, right way for the client, it can be a positive and a very, very strong asset in your portfolio to kind of help a client see a new product. To kind of give a little background, actuaries back in 2001 passed a new life mortality table that kind of superseded the 1980 mortality calls because of people were living longer. So basically what that means, before 2008 when that table was implemented, a lot of policies you see in the field are going to be outdated and overpriced. Just not to the fact that they're bad companies or bad products, it's just because they used a different mortality table in those times. So when you sit down with a client, we're going to kind of walk you through how I obtain it, how I kind of have the agent or the client trust me into kind of figuring out the big picture of how we're going to obtain this information in the home. First of all, using the One Life menu that we introduced to David at the last academy, to kind of go through at the beginning of your appointment all the products and services that we offer. You know, we're trying to educate the client first before we get into sales mode, because if you're educating and helping, they're going to trust you a little more than just going in and try to shoot off the hip and try to, get business. Using that, building the rapport. Obviously, that's very important with a client for trust to bring the wall down. If you haven't built any rapport and they don't trust you or there's no enthusiasm, there's going to be no information released to that particular agent at the appointment. You want to be organized. Obviously, have all your leads printed out. Show them that you're a professional. Write down or print your schedule out on a daily basis so they know you're busy. I use a leatherback binder. It's no coincidence that all these things that I use translates into a lot of business. It's because I'm organized, I'm professional, and little things like that go a long way with a client when it comes to trust. The only way you're going to ever do a replacement is if the client trusts you with their information. I never bash of another company. I never talk poorly about another company. It's just a numbers game, using the numbers to let the numbers tell the story. Okay? And then obviously we go into the lead piece. Mr. or Mrs. XYZ, you've sent the card in for one of 3 reasons. You don't have any insurance, you don't have the right type of insurance, or you don't feel like you have enough insurance. And out of those 3 reasons, what was the reason you reached out and sent that card in? They're obviously going to choose one of them. So if you're replacing the business, most of the time they're gonna kind of say that they don't have enough coverage. So what I do at that point is I say, okay, that's wonderful. You have some coverage. That's fantastic. What type do you have? And I would say 8 out of 10 times they have no idea what type they're even talking about or have. Well, Mr. and Mrs. Jones, let me ask here XYZ. Let's explain the different types of insurance to you to kind of figure out what you have, to kind of paint the picture of what you need. You know, walking onto a car dealership and you already have, 5 cars, you necessarily don't need anything. But if you walk into a car dealership and you have 4 kids and you're in a sedan, you're obviously targeting a minivan or some type of SUV to carry the family. So it's the idea of what your need is to see where we need to go. So what I do is I turn the lead card over, it's printed out on a piece of paper, and I explain the 3 main types of life insurance. Whole life, Mr. XYZ, the rate stays the same, the policy stays the same, and it develops cash value after year 2. That's your form of permanent protection. Term insurance is that you have to die within a term, temporary insurance of 1 or more years. Most commonly, AARP you get through the mail or Globe Life will go up every 5 years, and when you turn a certain age, this policy will end, and all the money you put into it goes away. Or some people take out level term policies from 1 to 30 years, but at the end of 30 years, the policy may go away, or the rate might increase very substantially, and there's no cash value. You want to talk in layman's terms. And then there's another type, Mr. and Mrs. Smith, or Mr. Jones, or XYZ, of another form of permanent protection called universal life insurance. So universal life insurance is a form of permanent protection to where, as the cost of insurance rises over time, not only are you able to access your cash value, but the policy is able to access that cash value to keep the policy afloat. And the reason why I educate clients on that is because there's a lot of underfunded universal life policies that were sold in the 80s and 90s at high interest rates that are not pertaining to the policy today. So therefore, they could collapse in their 70s or possibly on the verge of collapsing as now that they may not know. So then I turn around to them. I say, okay, knowing these 3 types of insurance that are in the market, what type do you have? And they'll kind of, at that point, after you educated them, they're more likely to open up about what they have because there's a form of trust. Educating first to get the trust walls built before you go into what they have. So therefore, they might say they have AARP or they have Globe Insurance. Well, now we're taking a term insurance product in their 60s or 70s, and I have a couple case studies I'll go over with you guys here in a moment, to where the term insurance policy may cost more down the road than it is to buy whole life today. So obviously term insurance is less expensive today but more expensive in the long run. Whole life insurance is more expensive today but less expensive in the long run. So you're talking about 2 different assets. Obviously, Mr. XYZ, if you plan on dying in the next 2 years, term insurance is your best bet, but not a lot of our clients are going to admit they're going to die in 2 years. Alternatively, if they say they have whole life insurance, I'll say, oh my gosh, what type do you have? Do you have the new kind or the old kind? They'll say, oh, I've had a policy since 1986 or 1989 or 1990, and I know that's pre-2001 mortality table. So I know that they're paying more, probably for a non-participating policy, than what they currently can get on the market, or they're upside down. Upside down, when I talk to a client, means if it's a non-participating, non-traditional whole life insurance policy, it was not participating in dividends, meaning they could possibly pay more into the policy than what it's worth. So if you do the math on a particular policy from 1986, which is 30 years later, let's say they have $10,000 of coverage that they've had for 30 years, and they're paying $35 a month. So you do 35 times 12 is $420 a year in annualized premium times 30 years. Mr. XYZ, since 1986, you've paid into this $12,600. And when you pass away, what does your family get? They're not educated, so they don't know. They're only going to get $10,000. So you are going to lose, your family is going to lose $2,600 on that particular policy. And every month, you're throwing the money to a company as a loss. Or we could cash it in using a buyer's guide, replacing the policy using the buyer's guide to explain to them you could either take the cash value, put it into a savings account, or use it to do a 1035 exchange on a new policy. That's up to you. But if I could put a few $1,000s in your pocket, get you first day coverage if you're healthy, what would you like to do? Most of the time in rural, low-cost income folks that we're seeing, they will take the money to use it to buy some bills, credit cards, help them live if they can qualify for first day coverage. That's where underwriting requirements, state replacement forms come in to make sure you're doing everything compliantly, ethically, and doing right by the client. So a couple case studies. I had a client last week. I was in Indianapolis traveling. She had 2 policies. Walked in. She was a hoarder. And she said, Scott, I don't know why I sent that card in. I just took out a Forester's policy a few months ago, and I canceled it. And I said, okay, I understand that, Miss Rita, but why did you cancel? I already have coverage. Wonderful. You're ahead of the ball game. What do you have? She said, I have 2 policies. I've had a policy that was a group UL policy from Cigna when I was working from 1990. Okay, how much do you pay? $31 a month. How much is the coverage? I don't know. No problem. What's your other policy? I have a $5,000 whole life policy that is, she's paying $16 a month for, she's had since 1986. I said, wonderful. Now, have you ever borrowed against these policies? No. So you have $15,000 of coverage. Well, Mrs. Jones, do you know where your policies are? No. The trust comes in after building the report and educating her. I said, would you like me to order some new policies so you have them in your home? She said, wonderful. Well, let's Google and get the numbers of these policies. So we Googled Equitable AXA and Signal Life Insurance, called the companies, and got the information right over the phone. She had a policy that was $5,000. Now, the AXA Equitable traditional policy was participating. However, it only had a $7,000 death benefit. The cash value was $5,940 in cash. And then the Cigna UL policy was underfunded. It was not meeting the target premium, and she was paying $31.80 a month, and the cash value was only $440. They were projecting that policy to lapse within 3 years, or the rate is going to go up every single year. So I explained to her that she's paying approximately $50 a month. She has $15,000 of coverage. However, she wanted $25,000. So when it's all said and done, she was healthy as a clam, very, very healthy. Took 2 medications, knew she was going to qualify for level coverage, so I wrote her a $25,000 whole life insurance policy, put $6,300 into her hands, take out the 10% for taxes. Obviously, you have to file the taxes. Withholding that, she gets about $5,700 when it's all said and done. Now, with that $5,700, I went over a couple of her finances and said, do you have credit cards? She had two credit cards of approximately $3,000. She was paying $200 a month to pay off. At high interest rates on a fixed income, she was going to be paying that for a long time. So I told her to use $3,000 of the $5,700, pay those off, and it would save her approximately $210 in monthly premiums that she was paying to a credit card company. So even though we sold her a $25,000 for $126, so she's paying $70 more on life insurance, but she was saving $210 in credit card bills when she pays those off. So she's going to put $140 more income into her monthly budget. She increased her coverage from $15,000 to $25,000, and everybody wins. The agent that was there previous was not a One Life agent. It was just a Forester's sale. Did not go over the customer service of what she had. So until you know what a client has, you're just putting more premium on top of a fixed income, and the odds of that sticking versus 30 and 25-year-old policies is very low. All right. Another policy case study, we'll go over this one, was a couple weeks ago, was a client, the Cohen, 7469. Mrs. Cohen had a United of Insurance of America credit card debt. She was looking to convert her husband's coverage from Globe Term, which goes up every 5 years, to a whole life policy. He was paying $40 a month for $10,000, and then obviously that was going to go up every 5 years. She had United of America. He was a smoker. He was 66. He was paying $40 for $10,000, but obviously a $10,000 policy for a smoker was going to be expensive. It was like $79 a month. She said, well, I'm only paying $40. So I explained to him again, educated them how it goes up every 5 years. When he was going to turn 75, the policy for Globe was going to be more expensive than what the term or the whole life was today. So I said, eventually, in 9 years, the policy is going to be more than what you're paying today, and there's no cash value in what you have. So we flipped his over from term to whole because it's a permanent solution. It's not temporary. It's not a Band-Aid on a wound that they're probably going to outlive. The second one was United of America. She had a policy for 26 years. She was upside down in that policy. She paid approximately $13,000 into a $10,000 policy. Her cash value was a little over $4,000, and she already had another Mutual of Omaha policy she's had for 3 years. It was a phenomenal policy. So instead of replacing everything, I told her to keep that. I told her to replace United of America, put $4,000 in your bank account. She's going to pay off a couple credit card bills, which is going to put about $200 of income back into her pocket. And she's going to. So I got 2 policies out of that for $170 of premium, just by looking at what they have and using that to help solve some everyday financial problems with folks on fixed incomes as credit card debt. How do we pay these? I'm paying more out than I'm bringing in. So just a couple of case studies that kind of help folks get in front of their financial solutions as opposed to keep chasing something. And remember, they did send the card in. They did want information on more life insurance. But sometimes just selling something to somebody they know they can't afford, there might be a solution right in front of you if they trust you enough to help them to that need. Now remember, anytime a replacement form or replacement's involved, you have to use the state-required forms by each carrier, so make sure you're doing it compliantly. Also, I also let the clients know that I'm not a tax advisor, so obviously when they do get that money back, they do have to claim on their taxes or have it withhold from the carriers, which is 10% of the amount that they take has to be filed for income purposes, but I'm not a tax advisor. So that's the art of the replacement. You know, these people are sending cards in for information on more life insurance, and like I said, how many times has a person been told or an agent been told, oh, I have coverage, I don't need it? Well, I don't believe deep down in myself that somebody filled out a card, they read the information on final expense, they filled it out with their handwriting, they probably located a pen somewhere in their house because it's never right in front of them. In their robe, they probably walked it to the mailbox, they dropped it in, and they waited for somebody to call them or knock on their door. And when that transpired, somebody set an appointment with them, or they came to the door and they let you come in and talk about that card. So there's a lot of hurdles for you to get to that kitchen table. For somebody to tell me I already have coverage, I don't need it, I'm going to dig deeper and find out what the true underlying financial situation is, because there might be funds to help solve monthly financial issues that they're struggling with at a high interest rate or on a daily basis. Let the numbers tell the story. Don't let you kind of think that you know what's best for them based on what they're telling you. Find out the information. And a lot of times, too, when you call these carriers to get the policies, order the information, you know, there's loans. Well, as you know, when you replace a policy in the world, the loan goes away. And any cash surrender value comes back to the client. So a lot of these folks, I had another client, last case study, and then I'll let you guys get to your Monday, was a husband and wife of Lincoln Heritage a couple weeks ago. They only had the policy 4 or 5 years, but they borrowed against them already, so they had a $700 and a $500 loan against the policy. Well, I could get them the same exact coverage for less than what they were paying and get rid of the loans. She was more happy to get rid of the loans and not have a loan that she had to pay back and have the same amount of coverage, and she was thrilled that she didn't have to owe anybody any money. So a couple different ways to do it. Term, whole, those types of things, cash value in the pocket, loans go away, but trying to fix their financial solutions is kind of why we're helping people in different times and different matters of their life. So with that being said, I can open up to any questions. I know it's a little bit different phone call than most, but 30% of my business comes from that. So wanted to share with you guys of how you guys can kind of up your premiums a little bit by consolidating coverages.
Absolutely. If any of you guys have a question for Scott, we're going to open up the floor for those questions. Again, press *6 to do that. I'm about to adjust the settings here. Give me just 1 second. All right, great. So let me unmute Scott again. All right, Scott's back open. Just press *6 if you have a question for Scott. Give us your name, where you're calling from, and give Scott your question. We'll hold just at least about maybe 10, 15 seconds with the floor open for you to be able to do that. *6. In just another couple of seconds, we'll give you guys an opportunity.
Hey, Scott. Scott?
Yeah, I'm here.
Can you hear us?
Yeah, how can I help you?
Hey, it's Rick Averster down in St. Louis. How you doing?
Hey, Rick, how you doing, buddy?
Great tips. Thank you. Thank you very much. Question for you. Does most of this take place on the first appointment, or are you having to go back to do some of this work?
All happens on the same appointment. I mean,
Okay.
90% of the time I'm doing it all in the house. It might be an hour and a half of the due diligence, but contacting the clients and getting them to do, I mean, when you leave the home, there's only a chance of about 20% of you getting back in. Right. So, 1 out of 10 times I have a client that I'm working with out of Aurora that they didn't want to pull the trigger on replacing their policies, so they're talking about it or, figuring it out, but I've been working with them for 3 weeks, but every time I call them, they're, we're still thinking about it. So obviously I know that's probably not going to be a sale. So I try to do it all in the house the same day.
Okay, wonderful. Thank you. I think we have one more question. Somebody's passed me a note. Do you have any hesitation when you call up to the carriers? Do you talk or do you let the clients talk?
We both do. I put it on speaker and say I'm sitting with Mrs. XYZ. She has a policy with you guys. We're just trying to figure out some information on it. Can you help us? And they'll ask who I am. I'm Scott Schaetty. What's your relationship? I'm just a friend helping her out. Usually they get timid when they talk to other agents because they know exactly what's transpiring, so they get very defensive. But, I'm not married to an insurance carrier. I try to help the client. So I don't care about insurance carriers. If it makes sense to the client, it makes sense. If it doesn't, it doesn't. It's ethical, doing the right thing. So there's no hesitation at all. I'm just driving the boat to ask the right pertaining questions. What they'll do is they'll get the client on the phone and get the authorization to speak to me, and then I'll ask all the pertinent questions and then paint the picture and let the client make the decision. I don't make it for them.
Wonderful. Thank you. And that's
You're welcome.
Last week, you guys don't have these numbers, but we had the numbers. Wrote over $13,000 last week. So great job, Scott. We appreciate your expertise. Thank you very much. Appreciate it.
Awesome. We'll leave the floor open for anybody else that wants to ask a question. Thank you, Rick, and you guys out there doing an excellent job where you are in the Missouri area. And, of course, I know you guys are very proud of Scott. Y'all are closely associated and work together and have a tremendous thing going in that area as well. So I want to open the floor again for anybody that wants to ask a question. *6 will unmute your line. Feel free to ask a question to One Life's Agent of the Year, Scott Schaetty. And I've got one for you, Scott. I actually have done at least one aspect of what you were talking about there in calling the insurance company. I found a lot of times people don't realize what they do have, or maybe they don't have a policy. Is it mostly just fact finding that you're doing there? And how do you ever run into barriers where even with the client you can't get the information you're looking for, and what do you do at that point?
Yeah, usually that comes down to a trust issue. If they're not releasing the information to you, because, after I educate them first, explain why I'm there, what I'm doing, who I'm with, all those types of things, we're a broker, I wheel in a bag with 36 different carriers or whatever the case may be, but the trust issue is where it is. But, from the standpoint of getting the information, when you make enough phone calls to insurance carriers and you see enough insurance policies, usually I already know the state of that policy without the actual information. So I know what type it is, if they've had it so long, and usually people procrastinate or they exaggerate the information. They've had it too long, they don't want to make a movement, or they exaggerate how long. Oh, I've had it 20 years. And then you call them, they find out they took it out in 2007. You've only had it 9 years. Well, obviously it's a different story when you're telling me it's 20 years old and versus 9. So just fact-finding, just asking the right questions. Even though I know the information, I still want to get the people from their carrier. I had a client a month ago tell me she's had a policy with AARP New York Life for 10 years. And I said, okay, well, your cash value is XYZ. Well, she took the policy out in 2014. Well, obviously your cash value was only $900 because she thought she had it for, she thought she had thousands of dollars in there, and it turned out she took it out in 2014, and she was basically in the home calling me and saying, hey, I need to find my policy. I said, ma'am, we don't need to find your policy. I have your policy number. We just spoke to the carrier, so this is going to tell you the same information in your policy. So I let the carriers tell me the information because they can't dispute that. They can tell them premium, how long they've had it, who the beneficiaries are, the policy number. They have it all laid out in front of them, and I'm not giving them that information. The carrier is.
And I have another follow-up to that, if you don't mind. I'm sorry, Scott.
Yeah.
No. Do you ever find the client themselves getting defensive, kind of because maybe they feel like you're questioning, their decision-making and getting in maybe a questionable coverage, or maybe if it's an AARP or a term or something like that? Do you ever find them getting defensive? And if you do, how do you diffuse that?
No, I'm here to help you. I'm not here to hurt you. What you have coverage, that's fantastic, but let me ask you a question. The average woman lives to age 84. The average man lives to age 80, 81. So odds are you're going to outlive this policy. So let's fast forward. What's going to happen at age 80 with your AARP term insurance? The policy is going to go away. They're going to contact you to convert it. And I have a competitor file at age 80, they're going to charge you XYZ for this particular policy. Term insurance is great, age market 30 to 50. I have a term insurance product on myself, Mr. and Mrs. Smith, because I have a wife that stays home with 3 kids. I know I'm wasting my money, but I know that if I pass away, my wife needs a lump sum of money that's going to pay for the kids' college, pay for the house, have somewhere to live, and stay on her feet. That's what term insurance is for. In your 60s and 70s, that's not what it's designed for. You're trying to pay as little as possible for as much coverage, but you may outlive it. I want to make sure you have something permanent that's not a question mark. So I diffuse it with situational aspects. What are we trying to accomplish? Because if you have a term insurance, it's a question mark. Believe it or not, there's only one type of insurance in the United States of America that we all know we're going to use. And that coverage is whole life insurance. You may outlive term insurance. Health insurance, they don't return your money if you don't get sick. If you don't get in a car accident, they don't give your money back. And if your house doesn't burn down, you don't get your money back. That's all what-if insurance. The only type of when insurance in the market you can ever purchase is whole life. So do you want to wait, or do you want to make sure it's a permanent protection now? And put it right back on them. One sale doesn't make or break or make me the agent of the year. I'm here to help you. To help as many people possible realize that eventually that this may not be the coverage for you. If you plan on dying in 2 years, then great. Keep your term insurance product. But what you told me is your grandfather lived in their 90s, longevity's in the family. The odds of you dying in the next 2 years is probably going to be of an accident, which there's an accidental rider on top of this policy that doubles anyway.
Absolutely. That's great stuff. Do you have any final thoughts you want to leave with us?
No, just, everybody needs to trust themselves as a professional, but go the extra mile to do the customer service. That's what people lack in the field is there's so many agents out there that are running out the door with the check before they even do a warm down or contact their clients for birthdays or follow-ups. We have a call center that does a lot of follow-ups with add-ons that, I don't have them do it on my clients because I contact my clients. I send them birthday cards. I reach out to them. I give them the customer service they need to where they have as much coverage with me as possible without them being in a financial situation. So customer service, if any agent sticks the flag in their portfolio on customer service, the rest of the sales will come.
Absolutely. Scott, thank you so much for being on the call this morning, and we also thank all of you guys, all of you agents here at One Life for joining us for the call. That's going to wrap us up for this week. Want to let you know next 2 weeks we're going to have some excellent guests as well. Frank Sayer will be with us next week, and then the final week of the year, the final week of February, forgive me. No, we're certainly not through for the year, but we'll have Scott Glanton on the 27th. So we'll look forward to having both of them. Again, thank you for being with us. Make sure you join us next week at 9 a.m. Until then, we hope you have a wonderful week. God bless.